Imagine this, you see a stock, it is backed by Mukesh Ambani, it is backed by Reliance, the same group that disrupted telecom and gave every Indian cheap data. The company's revenue has doubled in 1 year, its lending business has grown 149 times in 2 years. It has 23 million users on its app and the stock is down 25 to 30%. What is going on? Today we are going to answer that exact question, and I promise you the real answer is not what most people on the internet are telling you. Stay till the end because the last 60 seconds of this video might change how you look at the stock completely. Let us go back to August 2023. Geo Financial Services got listed on BSE and NSE after being demerged from Reliance Industries. This was a historic moment because investors were not just buying a financial company, they were buying a promise. The promise was simple: Geo did to telecom what no one thought was possible. 0 rupee call, 149 rupee unlimited data. It forced Airtel and Vodafone to their knees just by entering the market. Now imagine that same disruption energy applied to banking, to insurance, to loans, to investing. That was the dream. India's next financial revolution, built on Reliance 450 million customer base, powered by technology and led by the most powerful family in Indian business. Investor bought that dream, and for the while the stock reflected it, but then reality started asking the questions. Now here is where it get interesting, because when you look at the actual business numbers for financial year 2026, they look genuinely impressive. Geo Credit, the lending arm, had an AUM of just 173 CR in financial year 2024. By March 2026, it crossed 25,700 CR. This is a 149 times increase in just 2 years. In one quarter alone, quarter 4 financial year 2026, it disbursed over 10,600 CR in loans. The Geo Financial app has now 23 million unique users. That number grew 2.5 times in a single year. Monthly active users 9.3 millions. For context, most new age financial apps take 5 years to reach this scale. Geo Payment Solution crossed 52,200 CR payment processing volume in financial year 2026, 4 times what it was just 2 years ago. The BlackRock AMC, the joint venture with global giant BlackRock, crossed 15,200 CR in asset under management, and it has only been 9 months since launch. And now the revenue. Quarter 4 financial year 2026, total income 1020 crore. This is almost exactly double compared to the same quarter last year. Full year financial year 2026 revenue crossed 3513 CR, up 72% year on year basis. Now look at all this together. Lending growing 149 times, users at 23 million, revenue double, payments at 52,000 crore, AMC already at 15,000 crore AUM. So why is the stock at 240 rupees? Because there is one number they have not mentioned yet, and that number is profit. Quarter 4 financial year 2025, same quarter last year, the company made a profit of 316 CR. Quarter 4 financial year 2026, 272 CR. That is a 14% fall in profit. Even while revenue doubled, read that again slowly. Revenue doubled, profit fell 14%. And here is why. Total expense in quarter 4 last year 169 CR. Total expense in quarter 4 this year 720 CR. This is a 327% jump in expense in a single year. And now the company will say, and they are not entirely wrong, we are building, we are investing. This is the cost of creating the future. The CEO called financial year 2026 a landmark year and a pivotal inflection point. Fine, but the stock market does not wait for the future. It prices it right now. And here is the real issue the market is struggling with: return on equity. ROE tells you for every 100 rupees of shareholders' money in the business, how much profit is company generating. Bajaj Finance ROE is 18%, Muthoot Finance ROE is 20%, Shriram Finance ROE is 14%, Geo Financial Services 1.19%. 1.19%. That established financial companies in India are generating 15 to 20 times better return on shareholder capital than Geo Financial right now. And yet, Geo Financial Services P ratio is over 100. The industry average P for NBFC is around 17 times. Bajaj Finance, the gold standard of Indian NBFC, trades around at 40 times earning. Geo Financial Services over 100 times earning. That means investors are paying 100 rupees today for every 1 rupee of current earning. That is not a valuation, that is a bet on future, and the market is now asking, when exactly does that future arrive? Now to be fair, and I want to be fair here, what Geo Financial is doing is not simple. They are not building one businesses. They are building 5 businesses at the same time. Lending, payment, insurance, AMC and payment bank, all simultaneously. And each one requires capital, people, technology and time. For context, Geo Credit's lending AUM is now at 25,700 CR. Bajaj Finance, which has been doing this for 35 years, has an AUM of 4.84 lakh crore. This is 19 times bigger Jio needs years, maybe decades, to build that kind of scale and profitability. There is also a CFO change that spooked some investor. The group CFO Abhishek Pathak stepped down in April 2026. Management changes during a critical growth phase always make the market nervous. And then there is a treasury income problem. A big chunk of profit have historically come from treasury income. Interest earned on massive cash pile that came from Reliance demerger. As that cash get deployed into actual businesses, treasury income shrinks and business income has to take over. The transition is still in progress. So the market is watching three things. One, can the lending book scale fast enough and stay clean? Second, can ROE moves from 1% towards 10% in next 2 or 3 years? Three, when does the business income become the main profit driver and not treasury? Until those three questions have answer, the stock will remain under pressure, regardless of how many users the app adds or how many crores Geo BlackRock collects. Here is the honest truth about Geo Financial Services right now. The opportunity is real. 450 million Geo users, deep ecosystem, BlackRock as a partner, Alliance for Reinsurance, AI powered platform. No one is questioning what Geo can build, but the stock market lives in the present. And in the present, this company is spending aggressively, profits are falling, and ROE is at 1.19%, while the stock still trades at 100 times earning. Geo Financial is sitting between the two worlds right now. The dream is massive, but the numbers are still catching up. If Geo can convert its ecosystem into profitable lending at scale, if Geo BlackRock becomes a top 10 AMC, if ROE reaches at 8% by financial year 2026, today's valuation debate can look very differently in hindsight. But until then, the market will keep asking the same one question every single quarter: where are the profits? If you found this breakdown useful, hit like and subscribe button, because every week we break down exactly this kind of stories, companies where the surface looks clean one way and the reality is something else entirely. I will see you in the next video. Take care. Bye bye.